Good morning, ladies and gentlemen, and welcome to the show this Sunday, the 10th of October 2021. Thank you for tuning in. Now, you guys know what? I was out to Walmart and I bought some canned beans, I bought a whole bunch of cans of canned beans. So, anyway, yesterday I decided I was going to open a can of canned beans and put them in whatever I was doing. So I cut the can open. There's lots of water in there. I mean, as I was running the can opener, water was like splashing out, Water was right up full to the brim. So I completed cutting around the circle of the can. I opened the can up and I looked down in and I said, oh my goodness, where's the beans? It's all water. So I looked down in there and said, yeah, there is beans down in there. So I pushed the lid back down, as act as a strainer, and tipped it over and poured all the water out. And I opened the can lid back up again. And this is what I saw. Yeah, there's beans down in there. All the rest was water, but I'm going to tell you what, it was less than half full. It was not as low as as 1/3, but it was less than 50% of the can full. It was, I would say, somewhere around 40% full, the can by my estimation. Now, not one bean dropped out. That's how many were in there. What you see is what I'm talking about, so you can see I'm not exaggerating. This is part of the shrinkflation, but they haven't shrunk the can. They're just basically kept the can the same size. What they're doing is they're filling the cans with water and only putting half as many beans in as they used to. It's another trick they're pulling, guys. Let's talk about China. So many investors out there right now are sure that the Chinese junk bond market, right, is at a premium discount when you take in consideration things like Evergrande. And they're thinking to themselves, I'll tell you how they're all thinking right now. They're thinking, hey, when this really starts to collapse, in order to prevent contagion, Beijing's going to do something. They're going to restructure, or they're going to inject liquidity into the system, or they're going to prop up these bonds. But that's what we've done over here in the West. And look at the situation we're in now. That's what we did. We always bail everything out, I mean, we get down to the nitty-gritty. The Federal Reserve bails everybody out. So this is a Western way of thinking. This doesn't necessarily mean that the Chinese are going to bail these companies out. But what would that mean for China if they don't? If they let everything start to fall over in their property sector? Basically, what this is what the United States should have done back in 2008. If they had the balls to it's called a deleveraging. They should have allowed the system to deleverage back in 2008. And now we wouldn't be in the situation we're in right now. We would have a vibrant economy. Yes, we would have had a Great Depression. But I think we might have been able to withstand it in 2008. Now what we've moved into is a territory where we can't withstand a deleveraging. And I know you hear an awful lot of these economists out there that are saying, hey, the markets are going to roll over by 80, 90%. That's a deleveraging. That's what they're talking about. And it would cause a depression. But we have over-leveraged our system now here in the West to the point where we cannot withstand the deleveraging. Because what it would do is it would bring everything down. It would be a crash of such enormous proportions that the system would lock up and freeze. And everything would grind to a stop. I mean, everything, guys. It would be total catastrophe. So we can't withstand the deleveraging. But China's in the circumstance now where they might be able to withstand the deleveraging of the real estate market. And what would that do? Well, they would suffer a lot, the Chinese, but I think they could withstand it. And in fact, what would a deleveraging of China do if they didn't stop it and it went into contagion in the Chinese property markets, and which is a 50, well, some people say $55 trillion industry, and some people say a $60 trillion industry, Chinese property market, which is starting to deleverage right now, by the way, because the contagion is spreading to more property developers than just Evergrande. So it would cause a tremendous chaos in the world's financial system if the Chinese, but it's their decision, guys, and uh, you cannot dictate from the West to China to Beijing what they're going to do. It's their decision. And just because the West always goes with this thing about we'll never deleverage, we're going to keep leaving malinvestment within the system and just causing more and more zombieism, more and more zombie corporations, more and more zombie banks, and just continuing to bail everybody out. This too big to fail mentality. Look at where it's got us in the West now. We're on the verge of entire system collapse unless they continue to keep propping up these bubbles. Okay? So if the East decides that they're going to let it deleverage, they're just going to let the malinvestment clear out of their financial system, there's nothing we can do about it. But we got this mindset where they'll never do that because we don't do that. But what they don't realize is we're not them, and it's their decision what they're going to do, and they just might. And I'll tell you why I think that they just might. First off, like I say, they would suffer in the short term, but long term, their financial system will come out much stronger on the other side of this. They would suffer something like we had back in the 1930s during the Great Depression, but I think they would bounce back. I think they got enough strength behind their financial system that they could actually weather it. But what would it do to us if they deleverage? Because we're connected to them, and we are just like a giant tower of Jenga game. You know, that giant tower of blocks ready to fall. That's what we are. I'm going to tell you what it would do to us. It would be a financial if China allows themselves to deleverage, it would be a financial weapon of mass destruction for the West. It would be an arrow to the heart of the Western financial system. Because we are on such trembly ground, it would bring our house of Jenga house down unless the central banks all acted in unison to stop it from doing that to us. But for every action in this universe, there's an opposite and equal reaction. And if the Federal Reserve and all the central banks of the West decided to step in, if our financial system started to deleverage with the China, because the Chinese would deleverage first, make its way over here. And we're talking about something here that's at least a dozen times bigger than Lehman Brothers. Well, the central banks would have to step in. They got no choice because we can't withstand a deleveraging. It would kill us, our financial system. It would kill our financial system. So they would have to step in. But what would be the side effect of the central bank stepping in? Hyperinflation, guys. And it would set in really quickly then. Really, really quickly. In order to keep all these asset bubbles popped up, you know, if they started to deleverage, they would have to inject so much liquidity into the system. But now, at the same time, listen, guys, we got this debt ceiling coming up. And, you know, there's an awful... They haven't solved anything. They passed, just barely passed. It was like, was it 48 to 50 or something like that? It was really close anyway. They passed a $480 billion bill that will extend this thing off until December. So basically what that means is they're going to spend $500 billion between that just to get us to December. This is the condition that our financial system is in now at this point. That it's going to take $500 billion just to get us to December. But somewhere early in December, it's all going to run out, that $480 billion. And we're going to be right back around where we started again. in this impasse between uh, legislators that can't agree on anything. And then we're going to be facing the same thing all over again this December. A debt ceiling that's ready to come due. And because they've already done one extension, I mean, I probably shouldn't rule it out that they could do another one. But it seems to me that it's kind of unlikely that they would do another one, another extension like this. Maybe they will. I don't know. It's kicking the can. Politicians are always kicking the can down the road. It's tremendous what's been going on, but things are setting up for a very bleak 2022, and we've got the ports all blocked, and it's goods, and we're not going to see the effect of that for a couple months. We're not going to see the effect of that until 2022, and that's when you're really going to start to see store shelves empty of different types of goods that you're used to buying. I would say beware of 2022. 2022 is going to be a massive year of change. And it might be change on such a radical scale that's when your prepping that you've been doing might really come in handy, that might be the year for gold and silver too, 2022, and cryptocurrencies. Thank you guys for listening to my show. Like and subscribe, and we'll catch you guys Monday morning with another report. I'm going to be doing some research on the rest of Sunday here and trying to find out what's really going on, get the nitty-gritty on the whole situation. And we'll catch you guys Monday morning. And you guys give me a thumbs up, like and subscribe if you haven't liked and subscribed already, and ring that little notification icon. And anyway, bye-bye, guys.